Bitcoin has once again captured the world's attention. What seemed like an unstoppable bull run has suddenly turned into a sharp and painful correction. After reaching its all-time highs, Bitcoin has experienced a staggering 24% correction. Many in the crypto community are panicking, others are throwing in the towel, and fear has gripped the market. But what if I told you that behind the scenes, something much bigger is unfolding, something that could not only explain the crash but also hint at an even more powerful rally ahead? Let's dive into what's really going on with this Bitcoin crash, why most people are completely missing the bigger picture, and why history may actually be on the side of the bulls. The immediate trigger: Donald Trump's trade war fears. To understand the recent Bitcoin crash, we first have to look at the global picture. One of the most significant triggers of this correction has been the renewed fears of trade wars, particularly involving Donald Trump and his aggressive economic stances. With talks of tariffs, escalating tensions, and an uncertain geopolitical climate, risk assets across the board have been struggling. Crypto, often considered a risk-on asset in the short term, was no exception. When global markets tremble, even Bitcoin isn't immune to the shockwaves. Yet, while trade war fears may have been the spark, there's a much deeper cycle at play here. Bitcoin Fear and Greed Index plunges to extreme fear. One of the most telling indicators in the crypto market is the Bitcoin Fear and Greed Index. Recently, this index dropped to a score of 10, signaling extreme fear. Historically, this is a critical moment. Time and time again, when the Fear and Greed Index sinks this low, Bitcoin has set itself up for massive rebound. Why does this matter? Because extreme fear flushes out the weak hands. The so-called tourists of crypto, those who came in for the hype but didn't have the conviction, sell off their holdings in panic. But while they're selling, the seasoned investors in whales are quietly accumulating. Historical patterns you can't ignore. This isn't the first time we've seen Bitcoin crash into extreme fear territory, only for it to skyrocket shortly after. In fact, we have incredible historical data showing almost the exact same pattern playing out over and over. December 2018. Bitcoin's Fear and Greed Index dropped to $8. Everyone thought Bitcoin was finished. But what happened next? Within just 2 months, Bitcoin surged over 330%, going from $3,200 to over $13,000. March 2020 COVID crash. Fear hit extreme levels again with a score of 9. The world was falling apart, economies were shutting down, and Bitcoin collapsed. But within a month, Bitcoin rebounded 75%, climbing from $4,000 to $7,000. May 2021, China mining ban. Amid news that China was banning Bitcoin mining, fear once again gripped the market and the index dropped to $10. Just 2 months later, Bitcoin rallied over 33%, from $30,000 to $40,000. And now, we're sitting at a 10 once again. Could history repeat itself? The data says it very well could. Key support levels and technical analysis. Looking at the charts, Bitcoin is currently bouncing off its 200-day simple moving average, a crucial line that often acts as support during bull markets and resistance in bear markets. For 2 consecutive days, Bitcoin held above this level, which is a positive sign. However, if Bitcoin fails to hold this level, the next strong support sits around $27,000 to $30,000. These levels have been on the radar of traders for months. Also, don't forget the RSI, Relative Strength Index, which is sitting in oversold territory around 24 on the daily chart. Historically, this suggests Bitcoin is due for at least a relief bounce, if not a full reversal. Beyond Bitcoin. Major crypto news you missed. While everyone is fixated on the Bitcoin price, some incredibly bullish developments are happening behind the scenes in the broader crypto world. Bank of America's USD-pegged stablecoin. The CEO of Bank of America recently hinted at launching a USD-pegged stablecoin, pending regulatory approval. This is huge. It signals that big banks are entering the crypto space, and they're taking stablecoins seriously. This won't just be another small project. It could become a major player in the stablecoin arena, competing with the likes of USDT and USDC. The entrance of traditional finance into the stablecoin market cements the idea that crypto is here to stay. Cookie DAO's AI-driven crypto data. Another fascinating development is Cookie DAO, which is launching tools that combine market data, on-chain metrics, and social analytics to power both AI agents and investors. They're aiming to democratize crypto intelligence by making vital trading data free and accessible. Interestingly, Coinbase has even added Cookie token to its roadmap, hinting at a potential future listing. Solana. Ready to bounce? While Bitcoin gets most of the headlines, Solana is quietly setting up for a potential monster move. According to macro investor Raoul Pal, Solana is now 2 standard deviations oversold on its long-term regression channel. This makes it as oversold as it was during its 2022 lows, meaning the probability of a sharp rebound is increasing. Does this guarantee a rally? Of course not. But historical trends suggest that buying Solana at these levels could be like buying near the bottom. MetaMask and Foxy rewards. Another major step forward is happening with MetaMask, the most widely used crypto wallet globally. MetaMask is launching its debit card, allowing users to spend crypto directly while earning Foxy rewards through its partnership with Ethereum L2 Linea. This move brings us one step closer to mainstream crypto adoption, allowing people to use their crypto as easily as fiat currency. What happens next for Bitcoin? So, where do we go from here? If Bitcoin holds the 200-day moving average, we could see a strong relief rally. If it fails, we may dip into the $27,000 range, but that could present an even better buying opportunity. Extreme fear doesn't last forever. Historically, when everyone is scared, it's the best time to accumulate. Mass adoption news like Bank of America's stablecoin, Snoop Dogg's Web3 music, and MetaMask's debit card keep stacking up, proving crypto's long-term potential. While it's easy to get swept up in the fear of the moment, seasoned crypto investors know that this is how markets behave. Corrections are part of the game. But behind every dip, there are forces at play, quietly shaping the next big rally. This Bitcoin crash isn't just a random event. It's a complex interaction of global economics, investor sentiment, and historical patterns. But if the past is any guide, the crash we're experiencing now may soon be remembered as one of the best buying opportunities of this cycle. The content provided is for informational and educational purposes only and should not be considered financial advice. Always do your own research, assess your risk tolerance, and consult with a licensed financial professional before making any investment decisions. Crypto markets are highly volatile. Invest wisely. So while the tourists are panicking and selling, the smart money is getting ready. The real question is, are you?